What are the 6 key assets Kiyosaki recommends? Robert Kiyosaki, author of the best-selling book Rich Dad, Poor Dad, is a prominent figure in the world of personal finance and wealth building. He teaches that financial education, investment, and knowing wealth-generating assets are vital. Kiyosaki differentiates between assets that put money into your pocket and liabilities that take money out. Among his most advocated strategies is the focus on acquiring key assets that have proven to be instrumental in wealth creation. This video covers the 6 key assets Kiyosaki recommends for building wealth. It offers insights into how to use each one well. Real estate. Real estate stands as one of the cornerstones of wealth creation in Robert Kiyosaki's philosophy. Owning property is not the only goal. The goal is to invest in real estate to make money without working. This is done through rent or price increases. Kiyosaki argues that real estate offers advantages. For example, there's leverage. With it, one can control a large asset with a small amount of capital. There are also tax benefits. They can greatly raise returns. Investing in real estate requires market knowledge. It also needs good timing and the ability to manage or delegate property. Kiyosaki advocates for education in understanding market cycles. He also recommends selecting the right type of property and emphasizes the importance of location. He also emphasizes the power of real estate investment in providing cash flow. This is crucial for achieving financial independence. Real estate is not just an investment, but a tangible asset. If chosen wisely, it appreciates over time and contributes significantly to one's wealth portfolio. Businesses. According to Robert Kiyosaki, owning businesses is a powerful avenue for wealth creation. He differentiates between working for money and having money work for you. The latter is the essence of wealth building. Owning a business allows individuals to leverage systems and the efforts of others. This generates income and potentially offers unlimited financial returns. Kiyosaki emphasizes the importance of creating or investing in businesses. They require minimal work but give high returns. These are often referred to as passive income businesses or cash flow businesses. The key is to create a business that solves a problem or meets a need. It must do so in a unique way to ensure demand for its products or services. Additionally, he suggests focusing on businesses with low overhead. They should have high scalability potential so they can grow without raising costs. These include franchises, online businesses, and real estate investment trusts, REITs. They are examples of where investors can apply Kiyosaki's principles. These businesses offer the advantage of established systems and models. This reduces the risk and learning curve for the investor. Successfully owning and managing businesses contributes to immediate income. It also builds long-term assets. These assets appreciate in value, solidifying one's financial foundation. Paper assets. Paper assets like stocks, bonds, and mutual funds are essential to Robert Kiyosaki's strategy for building wealth. He also uses exchange-traded funds, ETFs. These assets are attractive for their liquidity and the diversity they add to an investment portfolio. Kiyosaki emphasizes the value of financial education in successfully investing in paper assets. It enables investors to understand market trends, assess risks, and make informed decisions. Stocks offer ownership in a company, and you can benefit from dividends and capital appreciation. In contrast, bonds provide a fixed income stream. They represent a loan from the investor to the issuer. Mutual funds and ETFs allow for investment in a basket of stocks or bonds. These are managed by professionals. They can mitigate risk through diversification. Kiyosaki advocates for a long-term approach to investing in paper assets. He focuses on value investing rather than speculative trading. He suggests that investors seek assets with strong fundamentals, undervalued by the market. Then they should hold them for their potential growth. Also, understanding the tax impact of investing in paper assets is vital. It's key for getting the most return. Kiyosaki's approach to paper assets is not about quick gains. Instead, it's about building wealth through strategic investments over time. Commodities. Commodities like gold, silver, and oil hold a special place in Robert Kiyosaki's wealth-building strategy. He views these tangible assets as a hedge against inflation and currency devaluation. Commodities have intrinsic value. This can provide stability and security in uncertain economic times. Unlike paper assets, they have this value. Investing in commodities is also a way to diversify an investment portfolio beyond traditional stocks and bonds. Kiyosaki often highlights gold and silver for their historical role as real money. He suggests owning physical gold and silver or investing in commodity ETFs. These assets protect wealth since they move inversely to paper currencies. They can appreciate during periods of high inflation or economic turmoil. Oil is another significant commodity. It offers opportunities for wealth through its critical role in the global economy and its price volatility. Kiyosaki advises investors to know the market's dynamics. They also should understand the geopolitical factors that affect commodity prices. He emphasizes the importance of timing and research in commodity investment. Intellectual property. IP is a unique kind of asset in Robert Kiyosaki's framework for wealth creation. IP includes patents, trademarks, copyrights, and trade secrets. This type of property can make much money. It does so through licensing, royalties, and sales. Kiyosaki points out that IP assets have the potential for high returns with relatively low ongoing costs. This makes them an attractive option for creating passive income. The author emphasizes innovation and creativity as the foundations of valuable IP. They recommend solving common problems or improving upon existing solutions in unique ways. This way, individuals and businesses can create new IP assets that stand out in the market. Moreover, Kiyosaki advises on the importance of legal protection for IP. This ensures that its value is secured and can be monetized over time. Investing in or creating intellectual property requires a strategic approach. Focus on areas with high growth potential and the ability to scale globally. Successful IP not only contributes to wealth, but also establishes a lasting legacy. This can continue to generate income well into the future. Robert Kiyosaki's teachings on wealth creation emphasize the importance of getting and using key assets. These assets include real estate and businesses. They also include paper assets, commodities, and intellectual property. Each asset class offers unique opportunities for growth and income generation. Kiyosaki's strategies rely on teaching about money and markets. They also need a long-term view on investing. Implementing Kiyosaki's advice requires a proactive approach to financial learning. It also requires a willingness to diversify across different asset types. By knowing the traits and benefits of each asset class, investors can build a strong portfolio. This portfolio generates passive income and appreciates over time. This leads to financial independence and wealth. Kiyosaki's 6 key assets are not just about accumulating wealth. They are also about achieving financial freedom and empowering oneself through informed decision-making. By using these strategies, people can navigate the complex financial world well. They can do so with confidence and success.